If you are a business owner and you do this incorrectly, it could land you in some hot water and you could be missing out on thousands of dollars in tax savings. What exactly am I talking about? I'm talking about how to properly document and track your vehicle miles so you can accurately calculate what your vehicle deduction is going to be. Not to mention, vehicle deductions are one of the most disputed items on a tax return under audit. So here's what you need to know so you can maximize your deductions while also bulletproofing yourself in the event of an audit. The IRS announced that they are going to be raising the standard mileage rate to 70 cents per mile in 2025. This is up from 67 cents per mile in 2024, which is an increase of 3 cents per mile. Also, as a side note, if you're going to be itemizing your deductions, you can actually deduct 14 cents per mile for any charitable related driving that you do for charity. But again, this only makes sense if you're going to be itemizing your deductions. Now, if you're a business owner and you use your vehicle for business purposes, you actually can deduct some of the costs associated with that vehicle on your tax return. Now, the way how you have to do this is you do have to start by tracking and documenting your miles. I would recommend downloading an app like MileIQ or TripLog or some type of app like that to start documenting and tracking your miles. You need to, number one, track the total miles that you drive in the year, and then you need to also separate out what was business and what was personal, because you can only deduct what was business. Now, once you do that, now you can start working on what your actual deduction is going to be. You can take either the standard method, which is what I just talked about, where you just take the total business miles, multiply by that set standard rate, and that's going to relatively get you your deduction. Now, the other option is the actual method. The actual method requires you, of course, to document your miles. You need to get the total business miles driven, and you're going to take that number and divide by the total miles driven. This will give you a business use percentage. Let's just say it's 75% of all. And since we're on the topic of depreciation, one of the things that's been really hot lately has been the Section 179 deduction. This only applies to vehicles that weigh over 6,000 pounds, and also you must use the vehicle over 50% of the time for business use in order to qualify for the Section 179 deduction. Section 179 is basically just another form of depreciation that is available to heavier vehicles. If you have a vehicle that weighs less than 6,000 pounds, then it does not qualify for Section 179. And just to clarify, vehicles are not the only thing that qualify for Section 179, but in regards to vehicle deductions, vehicles that weigh over 6,000 pounds are the only ones that qualify for Section 179.